Yeah, I need to make Dennis a co-host. Here we go. Dennis, you're now a co-host. You hear me?
Absolutely fantastic. You hear me okay?
Yeah.
Looks like a good group tonight.
We've got 20 so far. I think there was 80 RSVPs maybe. Cool.
Yeah, I am ready to go whenever you do your thing. I'm ready to go. When you say go, I'll go.
Yeah, well, we're going to do a couple of agendas and polls. I got a really important email from Amy Smith about 30 minutes ago about Marcus Smith that I want to, that's a new item on the agenda that I want to show, that they're announcing a name change and 3 major upgrades to Marcus Smith. So I'll show that email I just got from Amy, and then we're going to do the big picture, etc. But before too long, we'll be jumping over to you, Dennis.
Okay, excellent. I'm going to turn my camera off.
Okay.
And I will be standing by. Thanks.
Okay, good. Thank you. And go, Rich.
Hey, how's it going?
Doing good. Doing good. Yeah. We got 22, and I imagine more will come in. I've got the recorder going, so, and I've got Dennis as a co-host, so we'll be rocking and rolling here.
Very cool. You need any help on the back end, like letting people in, or?
I set it up so that the people would enter automatically without having to go to the waiting room. I think I learned my lesson on that one. And now I can have up to 500 people join May, but they had a half price offer about 3 weeks ago. So I signed up for the 500 person one. I'll probably go back to the 100 person one for next year or next fall.
After your summer break.
Yeah. Okay, well, I've got 24. I thought we probably have more by now, but we'll let them drift in and get started here pretty quick. While we're waiting for people, I'll share my screen and bring up the agenda. So let's see if I can figure this out. Can you see the agenda there, Rick?
Not yet.
No?
Nope.
Okay, let's try that again.
You sharing your screen?
It's on the way.
Well, if not,
Yep, now I see it.
okay. Because we're letting a few other people drift in, review the agenda. Everyone should read the disclaimer, which everyone knows we're doing this for educational purposes only. We're not offering buy, sell recommendations. All investments have risk. And the last thing in the world you want to think about ever doing is blaming me if you lose money. If you make money, you can say thank you. That's all you have to say. Nothing else is required. But we're all in this to support each other. And there's a bunch of us meetup leaders across the country, and we're doing this 100% as volunteers. So we're going to do a couple of polls. I'm going to review today's big picture. I got a really important email from Amy Smith about how Marcus Smith is going to have 3 important upgrades, and very soon they're changing the name to Market Surge. I'm just thankful they didn't change it to Market Faceplant. So that's my little joke for the day. I'm going to briefly review the performance of our stochastic strategy for TQQ and SOXL. I think everyone knows the market has just been amazing ever since about November 1. We had a little bit of a scare in early January, but our weekly model gave a buy signal on November 3rd and has not had a single sell signal yet. Today was a really hot day for SOXL. A few days ago, FNGU went up 14% in one day. So things have been moving very hot, but I want to caution everybody, even though we've got a very hot market, if you don't have good buy and sell rules and look for breakouts on proper base formations, it is possible to lose money in a bull market. Don't assume you can just pull the trigger on anything that shows up on the screen, or if you're listening to IBD Live, not everything they talk about is investable. Be careful. We're going to do a poll about your level of frustration in trading for the third time in 3 years, Dennis Wilborn is going to be speaking to us tonight as our guest speaker. And he has put a presentation together exclusively for our group. And it's called Trade with Confidence, Overcoming Fear and Doubt, with 3 strategic steps. And then we'll open it up to question and answers.
Floyd.
Yes.
Hey, Graham here. Sorry to interrupt. If you have a moment, can you and Rick share with us whether you have been invested in TQ or Soxal and how you've managed it?
Yes. I can share with you our weekly stochastics model gave a very specific signal. Let me bring up Thinkorswim and I'll show you. Can you see Thinkorswim?
Yes.
Okay, right here, we got a formal buy signal on TQQ on November 3rd. I cheated a little bit and I bought on November 1. I paid $33.53. If you waited until November 3, I think the price was about 37 or so. I put a very large investment into TQQ and about half as much into SOXL on the same day. And I've held them 100% of the time because our weekly stochastic model has not given a single sell signal at all. And so I think on TQQ, I'm up 75%, and SOXL, I'm up about 110 or 15%. Rick, you probably traded a little bit different than I did, if you don't mind sharing.
Sure. I did your alternate strategy on both TQQ and SOXL, which is a bit more swing trading and it gets you in and out faster. I'm trying to pull up my results, but it's been outstanding on both. Not quite as good as holding on to them as Floyd through the downturns, but I'm doing by far the best trading of my life since November 1st.
If you can see my cursor on the screen here, early January, there was a couple of 2 or 3 days that were a little bit scary on the alternate strategy, which has you buying and selling more frequently. The alternate strategy would have had you most likely get in on early January, then a few days later back in. And on the weekly strategy, we got no sell signal at all. So I hope that answers the question, Graham.
Yeah, absolutely. I just was curious if you had some scary days.
It was a tiny bit of a pucker factor. In fact, I don't remember the exact day, but I was watching it live. And on the weekly strategy, for about 5 minutes, it looked like we were going to have a sell signal, but then it quickly recovered from that and it closed out well above. I'm speaking of the fast line right here. On that day, it closed at 60, but intraday, it dipped all the way down to about where my pointer is for about 5 minutes. And I was looking at it diligently and saying, I wonder if I'm going to have to sell. And then as it turns out, I didn't. Every single person, they go with their own tolerance and maybe their own psychology and personality on trading.
Are you guys still doing the 533 and the
Yes.
I don't, the Market Smith version or the straight up version?
We're using Marcus Smith version for TQQ, and we're using full stochastics for SOXL. And from our back testing, we've determined, and I can't explain exactly why. On this graph right here, this is Marcus Smith stochastics, and this is full stochastics, and they look exactly the same, but I promise you they're not. If I try to use full stochastics on TQQ, my performance is degraded 10 or 20%. If I try to use Market Smith stochastics on SOXL, the performance is degraded. And so I probably have run 1,000 back tests and fine-tuned it down where I'm comfortable saying that we should use Market Smith stochastics for TQQ. And I recently did a test on FNGU
with different settings.
I'll be going into a little more detail on that because I have a graphic, but what I'd like to do is our first
cue.
Sure. I appreciate the question there, Graham. I think I have to stop sharing. Let's do poll number 1. We have 46 people. Poll number 1 is, where are you tonight? I've listed all 50 states, Canada, and if you're from somewhere else. So if you don't mind letting us know, it just gives us a sense of our demographics, and I'm always impressed with how many people are dialing in from the East Coast. It is 10 o'clock on the East Coast. We started our meetups 1 hour earlier because it used to be 11 o'clock. So far, 37% of our attendees are on the East Coast. Thanks for being with us. And I see my good buddy Carl's on here. Hi, Carl. I haven't seen you in quite a while. You're probably still the world traveler going over to who knows where. Every time I talk to Carl, he says, yeah, I'm in such and such place. And it's never here. You're in Maui, huh?
Yes.
Fantastic. Well, good for you, Carl. Hey, have you driven by Lahaina?
Yes, I have. What a disaster. I don't know how to explain it.
It's really sad. That was 6 months ago, and people's lives are still totally disrupted over there. So, it's not
It's
just
going to be a few years.
a few years and a few billion.
Yes.
Okay, well, I'm going to end the poll. We've got the 93% participation here. So I think if I'm going to share the results, hopefully everyone can see that. We have 2 people from other. If you don't mind unmuting yourself and let me know where other is. Last month, we had a guy that said he couldn't unmute himself, and he was calling in from Austria. And 2 or 3 months ago, we had a person calling in from China. And 6 months ago, we had New Zealand or Australia. So the 2 people that said other, do you mind telling us where you are? Okay, I'm going to stop sharing on that one.
I think somebody chatted it's Italy. Somebody posted chat, I think it's Italy.
I see Arizona, Las Vegas, Sunnyvale, Hawaii, Michigan, Italy. Hey, Italiano, welcome. Good to have you with us. And good old Rick's down there in Houston where it got so cold, the service line to his house froze up. Can you imagine that in Houston? It's unbelievable. So let's look at the big picture. I recommend that all of you that have been with me for a while, you'll know I recommend you read this every day. It is just packed full of what I feel is very, very important information. You read the whole thing in less than 5 minutes. Mike Larkin did today's. It says stock market rises, small caps make this bullish move. Can you see it?
No.
Okay.
Let me share.
Hang on. Thank you for saying something. Now can you see it?
Yep, we sure do.
ARM is unbelievable. I think ARM went up 50% today. It says ARM was a shooting star as it exploded on earnings and some other breakouts flourished. We've seen some huge breakouts in the last few days. Meta, Chipotle, there's more than just 8 or 10 substantial breakouts. It said that the NASDAQ composite spent most of the session in positive territory before turning in a final gain of 0.2%. It's not more than 1% so far this week. That means bullish would clear of short-term and major averages. The S&P 500 made another all-time high as it edged up 0.1%. It failed to close above 5,000. It actually hit 5,000 today for a few minutes, which is an all-time high. I can remember when S&P was like 1,000, So briefly clear that bulls will be keen. See the benchmark secure 5,000 Friday tomorrow. The index is now up 5% this year. For those of you that know, if you own the 4 X's, that's the S&P 500 times 4. And I bought a little bit of that, and it really is 4 times the S&P. It's up about 20% so far this year. See, advancers held the edge over decliners. Dow Industrial Average kept pace with other indexes. Thanks to 1% rise. Walt Disney led much of the watched index. I think Disney had some major announcements. So I'm not going to read all this. I highly recommend you read it all the time, but notice small cap 500 is 5,000. Small cap Shine confirmed uptrend. They're recommending an exposure of 80 to 100%. About 5 days ago, that was 60 to 80%. So they've moved that up and down a little bit this year. Distribution days have come way down from where they were 3 or 4 days ago. Leaders up in volume, SMCI, NET, ARM, TNB, leaders down. Dynatrace, Qualls, TIA and SP Global. Here's the ARM chart. Look at that gap up with a huge volume. This is relatively new, like an IPO. It's pretty amazing how much it's performed. Sometimes I do the market video. I'm not going to do it today because we've got a guest speaker and I want to give Dennis plenty of time. But let's go back and say the Amy Smith announcement. Let me see if I can find, here's Amy's email. Can you see the email that says Marcus Smith is changing his name to Market Surge? Can you see that?
Yes.
Okay. So Amy just sent this out. On March 4th, the Market Surge era begins with a bang. Exciting new features. The name Market Surge reflects where we want to take the platform, making it even more powerful. So here are the changes. And one, we've been looking for at least 20 years that I'm aware of, that if you belong to their industrial clientele and paid $20,000 a year or whatever, you got this quarterly earnings line that has always been absent from Market Smith. Apparently, this line is coming. It's an earnings line is a quarter by quarter plot of earnings per share designed to give you a visual representation of quarterly earnings. This is a real game changer and the #1 most requested edition by our members. And so that's coming. The ANTS indicator. Now, I haven't been following the ANTS indicator at all. And some of you probably know more about it, but it was developed by David Ryan, who used to work for IBD. I don't know anything about ANTS. I've heard him talk about it on IBD Live, but I haven't been following it. The other addition is forward earnings and sales estimates. Earnings and sales estimates are a handy tool for gauging consensus Wall Street expectations. That's why we're adding 4 quarters of forward earnings and sales estimates. Be careful with these because they are just estimates. So on March 4th, apparently we're going to see the name change. I talked to Amy and she put me in touch with one of the senior Market Smith managers. I made some very strong and compelling arguments to make the stochastic chart that shows up on Market Smith, to make those values for calculating stochastic. If you want to look at the moving average line, you can set the 50-day moving average if you want. You can make that a 40-day moving average or 49 or 55 or whatever you desire. And I'm asking them, let us modify the stochastics. And I told them exactly why. I said, look, if I go to a weekly chart, you're making me look back 14 weeks. And I said, when we're looking at these levers ETFs, 14 weeks is just too darn far to look back. And our back testing says you should only look back 5 weeks. So the guy I was talking to, he said, well, you can't believe how many requests we had. He said, some are reasonable, some aren't. And I said, please consider this, because I said, what I'm asking you to do, I can do for free on Thinkorswim. All I got to do is have a $1,000 account, and I get Thinkorswim for free. If you're not careful, you might be losing some subscribers. So think about it. So we'll see. But at least we see there's 3 improvements coming. They're listening out there. But I thought this would be something that.
What are they going to fix the math?
Say again? Say again?
Saying good, Graham?
Did you say fix the math?
Maybe he spoke mistakenly.
Can you hear me?
Yeah.
Can you hear me?
Yeah.
Okay. Are they going to fix the math on calculating stochastics?
I told him exactly how Marcus Smith is calculating stochastics. I have no idea why you guys truncate the number.
Yeah.
And he didn't know either.
That's crazy.
It's probably something they developed in the 60s or 70s. And as far as I can tell, anyone that is on IBD Live or works for Marcus Smith, they have no idea what's going on. I think we know more about stochastics than they do. Wait,
No, it's a big programming error. It's not something anybody would think to do. It's just an absolute programming error. They use the wrong function.
Anyway, it is what it is. So I wanted to share that part of what's going on here. And I wanted to review briefly. I want to show you, can you see a PowerPoint screen that says TQQ and SOXL trading update?
No, we're not.
Okay, that's fine. Let me get my act together here. You're dealing with an old man, everybody, so we got to be patient here.
Not a problem, Floyd. You're the best.
Can you see it?
Yep.
I showed this last month and I've updated it through the close of yesterday. I did a check using our stochastic strategy, which is the weekly strategy. I said, let's look back 4 years. Let's have our first trade be at the end of 2019, or maybe the first couple of days of 220. And then this was through yesterday, 4.11 years. We ended up with an ending account value for TQQ of 67.9% compound annual growth rate. So far this year, since the last trading day of December, TQQ is up 16%. We only had to do 22 trades with the weekly strategy in that 4.11 years. Our best trade was up 99.62%. Our worst trade was down 18%. If we did a buy and hold for that same period, we would have had $27,102. We ended up with $83,999. The part that frustrates me is our maximum drawdown. We had a 52.9% drawdown with this strategy. And so right now we have almost 30 people that have received the TradingView module and some teaching and mentoring from Gary on how to use TradingView using the same exact strategy as the spreadsheet does. And we've challenged the people out there. We said, improve the strategy we have. Go ahead and do back testing and don't worry about anybody's feelings. I said, if you can find a better way, we'll give you 100% credit. I said, but if you find a better way to trade this, the leveraged ETFs, please share it with us. And right now I hear that there's a fellow named, I think it's Terrell Conley and Eric Reese have come up with a couple of suggestions that we're analyzing right now, where they have been able to demonstrate even better results than what we're showing, which I'm very happy to hear. Maybe even at next month's meetup, we might present that. So let me move on. This is the graph showing for that 4-year period. The blue line is our strategy of the buy and sell. The gray line is just if you bought on day one and held forever. We see flat spots where we've gone to pure cash and we get back in. This is the one that ends up with 83,999 instead of the 27,000 buy and hold. If we go to SOXL, it's up 19% year to date. We only had to do 18 total round trip trades in a 4.11 year. We ended up with 84,721. Compound annual growth rate of 68.25. Notice buy and hold ended up with 19,428 versus our 84,721. We still ended up with more drawdown than we'd like to see. 65% was drawdown, but still we ended up with 84,000, and the graph looks like this. So this is our current strategy, and we're endeavoring as often as whenever we have an opportunity, we're endeavoring to improve on the strategy. Where I'm frustrated, and some of the guys I'm working with are frustrated. We have not been able to find a reliable way to go to the inverse levers ETFs when the signal tells us to go to cash. We know that there's an amazing opportunity out there. But as of today, I have nothing to present to you on how to do that. And so we're struggling with that one. We're going to do one last poll. And then, Dennis, you're going to be up after we do the last poll. And the last poll is, how would you rank your trading emotions? Rank your stock investing emotion state over the past 6 months related to fear, greed, ego, anxiety, euphoria, or whatever your emotions might be. So I'm going to launch the poll. It's totally anonymous. But Dennis would like to know, in setting up for his presentation, how you feel your emotions have been. And so it's totally anonymous. We'd like to have really good participation, if you don't mind. I can promise you there's been times in my trading career where my emotions were extreme. And with time and experience, I've been able to tamp those down. I wouldn't say my emotions have ever been what I would categorize as low or ultra low. Right now we have 55% participants. So if you don't mind just answering so I can share the results with all of you and Dennis, and he can get a sense of our group out there. Oh, good. Thank you. We're up to 76% participation. I'm going to give it about 10 more seconds, and then we'll share the results, and then it's going to be Dennis's show for us.
Hey, Floyd, the stochastic method that you do, what's the calibration on the stochastic method you use?
By calibration, are you meaning what period do we use?
Yeah. RT3. And is that fast or slow or full?
In Thinkorswim, it's the stochastic's full indicator.
For TQQ, we're using what's called a modified Market Smith stochastic strategy, which I don't think anybody uses other than Market Smith. So we actually had to have people go in and look at the source code and reverse engineer. Now we've got it down perfectly where we matched Market Smith to the T, but on your own, you're not able to do that, I don't think. Let me share the results.
I believe it's 1444, right?
No, 1444 is the default for Market Smith, but when we use what's called a Market Smith style stochastics, we force it to go to 533. But the values are truncated. Market Smith also only uses closing prices, whereas most stochastic indicators use intraday high and low prices in their calculation. And so Market Smith does it just a little bit different. Here are the emotion results: 17% low, 45% moderate, 31% high, and 7% extreme. I hope that gives you a little bit of a flavor. I'm sorry. There's a button here that says share results. You see it now?
It just popped up and went away. Now it's back. There we go.
I would guess that the more experienced, seasoned traders are probably more on the low end scale, and those that maybe experienced their first bear market ever, like in 2022, were more on the high end. Or occasionally you'll do all your homework and think you've made the perfect trade, and the next day the thing gaps down on you. And so that happens too.
What is choice 1 and choice 2?
Can you say that again, please?
What's choice 1 and choice 2?
He was referring to the
Second question.
that you didn't set up.
The first question was, where are you from? The second question is related to how would you rank your emotions?
No, she's referring, if you look at that results of the you rank your trading emotions, down at the bottom, it says question number 2, untitled question.
Oh, I have no idea what that is.
I think that came as a default when you set up your.
That's whoever spotted that. You're pretty smart. You caught me. I don't know what it is. We could make it up. Choice number 1 was, I'm good looking. Me, meaning me. Choice number 2 is, that guy's ugly. So 80% said I'm good looking. Thank you. So Dennis, it's your baby.
Thank you, Floyd. Appreciate that.
Did you vote for good looking or ugly there, Dennis?
Hey, man, I voted for good looking without a doubt. I love your hat. I've got one of those, but yours looks a lot cleaner than mine.
Dennis is over on Oahu. He's the IBD leader for the Bay Area money managers. Somehow they let him drift over to Hawaii and still be the group leader. That's
Thanks to the essence of being able to do Zoom meetings.
yeah. So Dennis, to tell you a little bit about, he's got his own little business going on, and he offers trading assistance to people. I'll let you go, Dennis. You can tell us however much you want and go on for your presentation.
Okay, first of all, I just want to make sure that you can see my screen. Can you see my slides? I will ask you to do a couple of things so we can get a really good recording. Please mute yourself and also kill your cameras. I'm going to kill mine so that we can proceed. It makes for a cleaner recording, and that will help when Floyd does the editing. Some of the questions we normally are along the lines of, will we be providing the slides? Yes, we will. Will we be providing the recording? Yes, we will. And so, yeah, if you could please go ahead and kill your cameras, I'd appreciate it. Here we go.
Got 53 with us now.
Excellent. Well, I'm glad we are together. The gentleman who is helping, I think his name was Gary, helping Floyd with the trading view. I would really love to talk to you about some of the stuff that we currently do with what we're doing. I'm trying to get some stuff going up on TradingView. I'm trying to teach myself how to use TradingView. It's a really great platform, and I think you can do some great simulations with it. Good evening, I'm Dennis Wilborn. I am the facilitator or organizer for the Bay Area Money Makers, not managers, money makers, Floyd. Money makers, yeah. Out of San Jose, California. How did that happen with me living in Makakele, Hawaii? I lived in Pleasanton for about 12 plus years, Pleasanton, California, and got started with the Bay Area Money Makers about 15 years and was instrumental in bringing the Bay Area Money Makers into being an IBD meetup group, because what we found was the strategies and systems that folks were using was losing money. And so I said, let's get this down and put it into using the IBD method, the Can Slim method for picking stocks. I go off the reservation a little bit because I've been trained in traditional technical analysis. And so I followed a little bit other processes to be able to get in and out of trades. However, I use the IBD process for evaluating the fundamentals, because I hate to evaluate fundamentals on stocks, and I use IBD's fundamentals. So in other words, when I send out my pre-flight checklist on the stocks we're trading to my premium members, every one of those stocks passes the IBD criteria for top growth stocks. And every weekend I review over 15 of the premium IBD watch list to come up with my initial list. So that's usually somewhere between 500 to 700 stocks I do a really quick review on. That pops out about 40 stocks. And then from there, we condense that down into a top 5 stocks set up for our trades that week. But enough about that. I'm not here to talk about autopilot trading. I'm here to talk about the fear and uncertainty of trading. I'm going to be asking some questions. I'll ask you to participate in that. Let me see if I can see. There's the chat box. I will be asking a couple of questions. Back many years ago, about 15 years ago, I was working with one of the renowned psychologists in the West Coast, one of the West Coast states, and she was absolutely brilliant in how she approached her work with clients. She was part of our group, the Bay Area Money Makers, and she came to me and said, Dennis, I need your help. And I said, well, how can I help you, Susan? She goes, I can't get into I keep missing trades. And I go, well, why do you think that is? Well, she goes, I'm watching like 50 stocks. And when I said, okay, tell me more. And so she went on and she goes, yeah, I watch 50 stocks. And, I put in alerts and all that type of stuff, but this stock starts to move and I missed the trade on that because I'm watching this one over here. I said, well, Susan, here's a partial solution to what you're doing. Start watching less stocks. For 90 days, start only watching 10 stocks. And you know what Susan's reply to me was? No, I can't do that. I go, well, why? She goes, well, if I'm not watching the whole 50 stocks that are on my list, I'm afraid I might miss something. So here's this renowned psychologist from a Western state bowing to FOMO and relinquishing her freedom and the ability to make a decision that would impact the way she would be trading. She had fallen susceptible to the trading cycle of fear, uncertainty, and pain because she was suffering the pain of not being able to invest in stocks. So I have a question for you. Has any of these happened to you? Now, this is where I'm going to grade you. If the first question I ask responds to you, I want you to type in the chat box sheep, SHEEP. If the second one responds to you, I want you to write in the chat box. And if the third one gets you started, I want you to write deer. That's DEA, correction. So have you ever been impacted by one of these three stories? Have you ever laid awake at night worried about a position that's open? If that's you, and it's not sheep, it's sleep, if that responds. But listen to all three. Have you ever done revenge trading? Now, if you don't know what revenge trading, it's where I'm going to get even with those SOBs because they took my money and I wasn't following a plan. So that's revenge trading. And lastly, have you ever watched a big profit turn into a big loss because you were sitting there like a deer in the headlights? So please, right now, you have three options: sleep, rev, or deer. Write your response. I like Floyd's response. He started with a really soft S and he goes, sleep. Oh man, I tell you. I've experienced all three of those. What are the steps you've taken to get out of that kind of situation? Because those type of feeling, those type of thoughts can impact the way you trade, and they're sometimes really difficult to get rid of. Did you know that 90% of the traders never achieve consistent success? It's a startling statistic that begs the question, why? And the answer lies deep within the cycle that many of us find all too familiar. It's the cycle of fear, uncertainty, and pain. These three elements are the major roots that cause mistakes in trading. The cycle isn't just a series of emotional responses. It traps traders into cloudy judgment, leading to decisions that veer far from our well-laid plans and strategies. Imagine you were sitting at your desk and the glow of your laptop illuminated the room as you pour over, the data, the charts, and all this type of thing. But instead of clarity and confidence, you find yourself beating your head against the desk. I beat my head against the desk and almost giving myself bruises on my forehead because of dumb trading decisions caused by the cycle. What about if I told you there was a cycle, that there's a way out of this cycle? And, it leads out of the depths of trading despairs to the heights of consistent success. Tonight, I want to go into some of that, but we're going to meet somebody here shortly. It's Sam the trader. Sam found himself caught in a very similar cycle. Sam's journey will explore not only challenges, the pitfalls that traders face, but also the strategies and mindset shift that helped him become a profitable trader. I am going to be sharing with you tonight 3 setups that will help you, if you start using these setups, will help you eliminate your emotional trading cycle or getting into this cycle. So let's go ahead and start on Sam's journey from pain to profits. Our story unfolds with Sam. And Sam, just like many of us, entered the world of trading not knowing his butt from a hole in the ground. Excuse me if that's a little bit stark for you, but he basically said, how hard can it be? And he was expected to, reach financial freedom, vision, chart-topping success. And he was just enthralled with the potential of the stock market. He envisioned himself navigating trades with the precision of a seasoned pro after 2 days. And that would bring him closer to his trade. But before he was able to get very far along in his journey, he came to a point in the road. So remember, Sam's story is not just about trading, but it's also about a quest we all embark on. Did you know that if you become a better trader by learning how to manage your emotions, or not, one of my good friends brought that up. You got to learn how to talk to your emotions, to tell them to go away. If you do that, you'll actually become better at other things you do, better with your families, better with your trading. It's really kind of a cool, the other things that happen to you when you start learning how to change. And so we're going to go see Sam's as he's gone across what I'll call the bridge of transformation. I will be offering questions. You can ask questions at the end. Let me go ahead and get through and so before we delve into the rest of Sam's story, I want to take a moment and just ask you a question. The question is this: does this resonate with every trader's experience? Have you ever stood on the brink of making a decision for trading and your finger hovered above the buy or sell button on your mouse, but you were paralyzed? You couldn't put in the trade. If your answer to that is yes, you're not alone. It's about moments of hesitation to define our experiences in the market. It is in these moments of indecision that the cycle of fear, uncertainty, and pain begin to take hold, clouding our judgment, obscuring our path to success. And as we continue to follow Sam's story, we find Sam at a crossroads. And he's thinking about, we can think about our own moment of hesitations. If you've been here, think about what you did to get out of here. It's through understanding these moments that we can begin to recover or uncover the keys to break free from the cycle that ensnares many of us. So we all started our trading journey with the dream. Remember what it's like for you? Sam was basically saying the dream of financial and lifestyle independence and freedom, the allure of making all that money, the strategic moves that would catapult him into the future where he could walk away and stop working for the man. That was Sam's objectives. He was full of optimism, waiting for the markets with belief that just the right amount of effort and just the right amount of money could crack the code. Sam was drawn to the charts, the numbers, the thrill of the trade. He saw himself as captain of his own ship, navigating through the turbulent waters of stock market. And then he went to options, and then to futures, but never found success. So because he thought with a steady hand and a keen eye, it can't be that hard. It can't be that much of a challenge. It's a powerful dream, one that promises not just wealth, but freedom. Then the but happens. But as many of us know, the reality of trading can be starkly different from what we originally envisioned. When I envisioned what my trading would be, oh gosh, over 30 years ago, I envisioned that it was going to be so simple. I started trading online back when we still had dial-up modems. Do you all remember the dial-up modems? If you remember the dial-up modems, please put a Y in the chat box. Do you remember dial-up modems and getting your stock information for that? The ones that would go ding, 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 ding. If that brings back really bad memories, it should, because things are so much simpler now. I remember buying my first data for charts, and I could only afford to buy 100 charts, stock charts that only went back for a year. And gosh, now at the click of the switch, we can go back and see what happened back in 1929 prior to the crash, right? So several people remember the dial-up modems. So Sam realized hard and fast that the market with its volatility, unpredictability, was not a code to be cracked, but a force to be reckoned with. Each loss hit Sam like a wave, eroding the shores of his confidence. The highs of successful trades were exhilarating, but the lows left him questioning everything he thought he knew. it was at this point, he was no longer the captain of his own ship, but instead at the mercy of the unforgiving sea. And this is the reality of trading. Without a plan and then sticking to your plan, and we'll define a little bit of plan here a little bit, the unexpected challenge and the lessons learned hurt. And that hurt can happen again and again. And so we find Sam caught in the cycle of fear, uncertainty, and pain. It's a cycle many of us are too familiar with. It leads to hesitation, uncertainty, clouds our judgments, and the pain and loss reinforces our fear, trapping us in a loop that seems impossible to escape from. And here's the thing, Sam's story doesn't end here, and neither does ours. While the cycle may seem daunting, there are ways to break free, to regain control and navigate through the storm. One of my biggest fears that I had was, you know how hard it is to go tell your spouse, hey, honey, I blew up a trading account of several $1,000s, which she was not real happy with because she had plans for that money, right? You talk about scaring the heck out of me, but that fear stayed because I didn't know how to get it out and then management. So in the next few slides, we're going to be going over some manifestations of what does the fear look like and impulsive trading looks like. And, are these signs and symptoms, they're not total, but they'll give you a big surprise of what Sam was going through. So emotional trading, what does it look like? And I put here, it's emotional roller coaster. What does emotional trading look like to you? Can you put in just one word that explains what emotional trading looks like to you? Take about a couple of seconds and drop that in the chat box. I really appreciate you dropping it in because it gives a lot of great feedback to not only me, but also to Floyd as he builds the curriculum for the Anchorage IBD meetup group. He's doing some absolutely phenomenal stuff. Instability, that's good. He's doing some phenomenal stuff with the confusion, FOMO, love those. Fear kind of has a different face for each one of us. Gilbert brings up anger. Have you ever broken a cabinet drawer because you were so angry at a trade that just went against you? One day when we were living in California, a trade just went against me and I was ticked off. I was angry because it wasn't the first one that had happened that week. So I went storming downstairs to the kitchen to get some coffee. I opened the drawer to get something, and I just slammed it with all my might. And the drawer lip cover popped off. My son comes running downstairs and goes, Dad, I go, don't tell your mother. So we got the Elmer's glue out and the clamps and clamped it back on. By the time Michelle got home from work, the drawer was at least quasi-fixed in a fairly stable mode. So thanks for all those indications. Emotional roller coaster. Yeah, that's what Sam was on. Can you imagine that? It's not fun. It's not fun like being at the amusement park. It's an emotional one. Did you know that? I think it was Floyd, not Floyd, but Freud, or maybe it was Einstein, who said something along the line that when we get emotional, our IQ actually goes down somewhat. And so when we get emotional, we can be prone to making dumb decisions. That doesn't mix well with your trading account. But it's like trying to walk a tightrope in a windstorm where fear and uncertainty are trying to knock us off balance. What about paralysis by analysis? Sammy's frozen in front of his screen, doesn't know what to do, and he's screaming. I bet none of you have ever screamed at your chart on your screen if you're sitting there watching the trade. But it's analysis and paralysis in its purest form. For Sam, making a decision becomes daunting. Every option feels like it could lead to a disaster. So paralysis isn't just a roadblock, but a brick wall that keeps him from his trading goals. It's been built brick by brick with uncertainty, fear, and pain. Chasing shadows has a lot to do with our memories and the memories of past trades and how they just kind of come back and haunt us, our past losses. Well, if I take this trade in this particular entity, and oftentimes is what keeps us out of a perfectly good setup in a perfectly great stock or ETF, because we lost on it last time. In every case, we have to basically be able to say, scatter, get those evil memories out of those. And so both emotional and financial, if by not addressing it, both emotional and financial dwindle, leaving him stranded in the desert of pain. The pain we suffer from our trading or our inability to trade with a plan and be successful is really debilitating. And anyway, the psychological capital that we lose because of it keeps us from finding a better way. Fortunately for Sam, after navigating through the tumultuous seas of trading, he stumbles on a beacon of hope. One of the things is you have to have a physical setup, you have to have a mindset setup, and you have to have a psychological setup. So I'm going to cover the 3 setup routine that will show you some solid technical places where you can take action. And we'll talk a little bit about what the other things Sam can do. So let's jump into that. I've been there. That was a picture of me before my hair turned white. And I think my hair turned white because of the cycle of fear, uncertainty, and pain. I would ask you to reflect on your own trading experience for the moment. How often have you felt that despite your best effort, your decisions are still clouded by fear and doubt? If there was a way to navigate through those emotional currents, and one of the ways of navigating through the emotional currents, and if you're taking notes, I'll cover a couple at the end that will be surprising to you. This is where Sam discovers and shines a light on the path many of us are searching for. And I just call it the 3-step setup routine. And it isn't just about where to enter, where to exit a trade. It's about creating a foundation of confidence and clarity, not just in your system, but also in yourself. That's a big key in learning how to overcome these 3 components, is learning to have confidence in yourself. You have to literally prove yourself to yourself. So stay with us as we explore what's going on with this. So first, how does it work? As I talk through the 3-step setup, and I talk about a lot in section 2 of my book, Trade Your Way to Freedom, the routine is more than a set of entry and exit points. It's a philosophy. It emphasizes the importance of preparation, patience, and precision. Those are all keys to unlock yourself from the cycle that we've been talking about. For Sam, applying this routine meant he wasn't just reacting to the market, but anticipating what the market was going to do and making decisions based on a strategy rather than emotions. I also can call this the precision entry point targeting routine. Uses 3 powerful, high probability trading signals, collectively known as the strategic trading signals, to identify trading opportunities in the market. Floyd, you mentioned earlier that you were looking for a mechanism by which you could get into the leveraged inverse ETFs. I have been very successful in trading the leveraged ETFs. It's part of our routine with the autopilot trading members. It was a trade that we made some great money last year in SOXL as it was going up, and then we trade the inverse as SOXL or SOXX was going down. And it really does help contribute to the compounding. But anyway, it's a 3-step setup routine, uses 3 powerful. Let's run through this. Each is actually a strategy you can use by itself, but when you combine them, it makes it that much more powerful. When the clues of the strategic trading signal converge, the trader has a high level of certainty. Oh, we put a check in the block for taking uncertainty off the table. Uncertainty on when and where to place their trades. The precision entry points help with patience and disciplines. Oh, two other keys on helping you get out of, unlock yourself and unchain yourself from the cycle. So the first one is price approaching strong horizontal support is one of your first triggers and one of your first signals. Identifying strong level of horizontal support. Horizontal support acts as a price floor and can provide a foundation for potential uptrend. The thing that many traders don't realize is that horizontal support and also horizontal resistance, but we're not going to talk about that. But horizontal support is the strongest type of support that you can find on the chart. There are also dynamic supports of trend lines, moving averages, and Fibonacci's. But if you're going to grade the strength of the support, the horizontal support should get an A+, as you're grading it. Confirm the present of horizontal support. What do you do? How do you do that? You look to the left and you see things have started to set up in the past. And here's an example of 3 levels of support. On this section right here is where it bounced and took off for its upper run. So identify horizontal support can help traders take advantage of potential buying opportunities with relatively low risk and high reward. Why is that a place of relatively low risk? And I'll just let you place that into the, and those of you who are, I noticed there's several people who are autopilot traders, and so I'm glad you guys are here tonight. Why is that a level of low risk? So here's the way that strategic trading signal number 1 works. As you approach strong support, we can start, once we have a proven level of support, it opens the door for us to utilize this area here to place conditional orders to enter a trade. And yes, they're easy to place. And also, we're really close to a stop. That's exactly right, Graham. Sometimes it's best to enter a trade when you're closer to the area to be stopped out. Let me take my losses quickly. Strong support, and away we go. Trading signal number 2 is wait for a bullish candlestick. I did a course with Stephen Bigelow many years ago and was certified under his program as a candlestick technician. And I love using candlesticks because they paint and tell you a story. If you wait for that candlestick to finish, in other words, it's at the end of the period. So a daily candlestick finishes at the end of the day. A weekly candlestick finishes at the end of the week, and so on. Waiting for a bullish reversal pattern, here are some of the highest probabilities. Bolkowski talks about it in his book. The probability of success on this one is 79%. What is it? That is a bullish engulfing pattern, strongest of any of them. A piercing line, which is a cousin to the bullish engulfing, 78% probability of a successful reversal and continuing on to at least hit profit target number 1, in this case, back to the swing high. And then a bullish hammer, probability of success, 66%. So again, as I'm looking at my charts and I see this, I look for those patterns if they show up along with the plus of having a strong level of support. That increases my confidence that I can make a trade there. And if I make the trade, I know exactly where I will take my profits and take my loss if I get stopped out. When you have those identified and put your conditional orders in ahead of time, you can sleep at night, which I kind of like sleeping at night. And so that's one of the things I've been using for years and years and years. And I do have a tutorial on how to utilize the candlestick, just the ones you need. And I don't go into a big, deep involvement with all the exotic candlesticks. And I think I have 7 or 8 of them, both bullish and bearish. And they're really the only ones I look for. It keeps my brain from having to load up on stuff and spending energy on things I really don't need. So here's number 2. Again, I've got my level of support right here, right? And then what do I have? I have a downtrend and I have a hammer. Excellent. That's a good indication that I can now look to buy off of that hammer. Hammers and bullish engulfing and piercing lines are all self-confirming. So if you're a candlestick trader, just be aware that I personally trade this where I look for a pullback into the wick of the hammer, or I look for a breakout above the trend line. And then what's my expected move? At least back up to this level here. So in this case, I'd be looking at a move from about $32 up to $39. You can do the math on the return on that, but that's what I'm looking for. So that takes care of signals 1 and 2. Strategic trading signal number 3. This is one that I think is probably the most important of the 3. And it is the momentum shift from the oversold condition or a level of support back up and crossing back up to the upside. I know Floyd uses the stochastics, and some people use RSI, some people use MACD. I like to use TSI, True Strength Index, and those who trade with me know how well that works. I won't talk about it here tonight, but market forecast on predicting the swing lows and when you're going to get a strong reversal is uncanny. And if anybody who is an autopilot trader want to chime in to let people know how those indicators work, that would be awesome. A lot of people ask me, why do you use TSI rather than RSI? TSI fits my eye better. And also, surprise, surprise, I was able to get into it and tweak it where it actually provides some exceptionally great timing for when price actions are going to reverse. That's what I use. So this is an example of the TSI. The TSI can be downloaded on the Thinkorswim platform. And I think there is some also over there I know there is over on TradingView if you use that for your charting programs. It is a measure of moving averages, but it does so in such a way that it shows excellent timing for I look for that cross right there. And once I have the cross at the lower level down here at the -42 level, that's telling me I am really close. I'm looking for the next thing to happen. That's my trigger. These price actions are my setups. Then that's my trigger is that crosses. Then when I get the price action, this would give me the confidence to buy that hammer. Buy that hammer. And as you can see, it continues to move along. The other thing I like about the indicator, and I won't spend a lot of time on that right here, is that it also does an excellent job of showing where you can chart with that. It shows things like positive divergence and negative divergence from the top side when price actions are hitting a new high. However, my momentum is not. That's a clue to say, get ready to take profits or totally close a position. And eventually it could lead to being able to take a trade to the downside. So these are the things that I utilize on my charts on a daily basis. The other thing I like about TSI, if you're an intraday trader looking at the weekly charts or even the monthly charts, I don't have to change anything about this indicator. What I use is 883 exponential, and I lay in the lines at the 42 level, positive 42 and negative 42. That defines my overbought and oversold conditions, and when it's more advantageous to be looking for a trade. It can give me indications on pullbacks for how to get into trades that way also. So that's awesome.
So you've modified the default values from Thinkorswim.
Yes, I did. And I owe this to my good buddy Larry Suttereth in San Antonio, Texas, who turned me on to this originally, him and Andy North from Austin. They turned me on to TSI the way they were using it. And the engineer in me said, there's got to be a better way. So I monkeyed with it. I know I advise people don't monkey with systems, but I did. What it did for me is it brought things closer to the actual reversal bottoms that gave me a larger opportunity for a larger profit margin. So we still use that. And then we've got a couple of people in our autopilot group who did some additional programming on how to utilize this in a better way and added a couple more lines for me. I love it when a team comes together to work on helping other traders. So let's see. I think I have an example. No, just a summary. So the strategic trading signals: 1, identify a strong level of horizontal support. That's number 1. 2, identifies bullish. And so that brings us into the price action. And number 3 is that momentum shift. The momentum shift is what is critical. I used to trade stochastics all the time, and I had a terrible habit that left me in the cycle of fear, uncertainty, and pain. I wouldn't wait for the signal to switch around and cross back up to the upside. I was trying to pick my bottom or guess when it was going to turn around. That did not end well, and I lost too much money for that to be, it was not good. Anyway, I eliminated that about 15 plus years. We've had a phenomenal record over the last 12 years. We beat the S&P 12 years in a row with an average return of a little bit over 37% per year. But as I say here, by using a combination of these 3 strategies, these 3 strategic trading signals, traders can achieve greater consistency, discipline, because it forces you to wait, and probability in their trading results. So here's the plan of action that you can pull from this. And again, the slides are going to be provided to Floyd tomorrow. Is when you get the convergence of clues on all 3 type of signals, you can identify your price target that will trigger the trade. That's what you'll use for your conditional order. Write it down in your journal. And everybody at the level of the people on this call should have a trade journal. You will never achieve the height of trading that you want to if you're not using a trade journal. Floyd, do you agree with that?
100% yes.
Amen. Thank you. So set conditional orders to buy at the target price, and then set conditional order, at the open. This is the way I like to do mine. Is the way I teach it. I set a conditional order to buy at a particular price, but then I also have that order trigger my exit orders. So again, I call it a fire and forget conditional order system, so that I've already identified my profit levels. I encourage people when they're first getting started, take some profits at 10%. Now, why would I do that? The reason is many people have been up large amounts, 20, 30, 40%, and watched as that trade turned against them and went to negative, and they lost money on it. So if we have to learn and build the habits of becoming a winner, and if I'm taking profits at 10%, it's a much higher probability that you're going to get to 10% rather than 20%. The probability does go down the higher you go in profits. If I can get people to take some of their profits at 10%, then the rest of the trade, the way we set up the trailing stops, that trade will never be a loser. So set conditions on the open orders that will trigger the orders to sell. If in one order, we manage both the risk and the potential reward by setting specific entry, exit, and stop loss levels. Here's an example of something we did. I'm at support. There we go. 2, Candlestick reversal signal? Yes. 3, bullish momentum? Yes. What happened? I'm glad you asked. Place the order. So we bought. There was the trigger, and the price went all the way back up until it reversed. Where did I tell you it was going to reverse? Not just because I knew these slides. Didn't I tell you it was going to potentially run into a strong level of resistance at this level up here, about 39? Look at that. Absolutely amazing. Then I get a reversal signal that tells me, don't do anything. If I'm trading to the long side, don't do anything until I get a new reversal signal, which will be down here somewhere. So how to master the routine, the application is 1, focus on learning one strategic trading signal at a time. That's the way you master it. Mark Douglas and his wife, Paula Webb, said to focus on one pattern and get darn good. You master that pattern. Did you know that the majority of successful people don't focus on results? They focus on the process, whether it be in business, but it certainly goes that way for trading. So you find a process, you find a system with an edge, focus on learning that. Don't worry about the nuances of, well, why does it work the way it works, blah, blah, blah. If you can learn 80% of how it works, you will become a successful trader. Now, will every trade you have make money? No, because this is the kind of business where if you hit 60% of your trades as making money or winning trades, you're above, way above average. Normally, a swing trading system hits about 65 to 70% is their win-loss ratio. But if your reward risk is, let's say, 2, 3 to 1, and you're only losing 5% max on your losses, you're going to be making money. One of the things that Lloyd asked me to talk about a little bit is how do you get out of the emotional stages? Well, you got to start looking at the right things. And one is that. Practice trading on a trading simulator. Swim has a great one. I know that TradingView has a great simulator where you can literally go in and do that. Mark Douglas and his wife also said that you need 400 trades to master a trading system. Now, if you trade once a week for 4 years, you will have 400 trades. The simulator enables you to jump past that, where you can basically get your 400 trades, give yourself 90 days to 6 months to complete your 400 trades. Take notes, journal your 400 trades, and then those patterns get melted into your mind where you know what you're looking for. When I was flying with the Navy, I flew attack jets. We would have to memorize flashcards of what the enemy's airplanes, submarines, and ships look like. Those became galvanized in our muscle memory so that if we're flying at 20, 30,000 feet and we saw the silhouette of another aircraft, ship, or a submarine, we know exactly what it was. We know if that was friend or foe. But did we do that just by picking up the cards one afternoon and looking at it? No, we had to practice it. And we would sit down as a squadron and go through how to do that. I encourage you, schedule time on your schedule to practice your trading. Until you do that, it's just like journaling. I hope you get serious about it. Do that. Is anybody doing trade simulation? If you are, put a Y in the comment section. Cool. Great, Rick. That's awesome. I love doing simulation. You learn so much, even now. So build a checklist for the strategic trading signals and then journal and track your results. So have we conquered it? This is where Sam discovers the shining light on his path that many of us are searching for. This 3-step routine, it isn't about just where to enter, where to exit. It's about creating a foundation and a routine of confidence and clarity that will cut through the fog of your emotional trading. So as you stay with us, we've explored this approach that has not only changed Sam's perspective, but it's made him a different person. He's crossed the bridge of transformation, and he doesn't get caught in the cycle of fear, uncertainty, of pain anymore. And so where Sam began to apply, when he began to apply this, is some of the things that are happened. He's right back, but now he's a confident Sam. He began applying the 3-step routine to his trades and meticulously planning his entry and exit points, adhering to the discipline of risk management and strategy. He was playing chess with the market, but now he finally understood how to think several moves ahead, which is phenomenal. Can you imagine being able to think, let's see, if this price action does this, it's going to fall to this level, and marking that level on your chart, and sure enough, it did. Now I can take action. With the proven routine, Sam's mindset began to transform. He learned the value of detachment, viewing his trades through the lens of strategy rather than the fog of emotion, and was as if he switched from the turbulent waters to a calm lake where each ripple of the market was clear and navigable. As with any journey, was Sam's without any bumps? Of course it wasn't. We're going to have bumps along the way. Whenever we want to establish new habits in our behavior, we have to start with a new belief. Our beliefs will generate into what we're thinking. Our thinking will generate into developing a plan. The plan, when executed, will generate a new mindset. He documented his journey, and now it is truly a story of transformation as he's broken free from the cycle of fear, uncertainty, and pain. Success is no longer measured in individual trades. It is now measured in the consistency of his approach and the growth of his portfolio. Oftentimes we get hung up with, oh, I made 50% on a particular trade. No. Change your mindset to be thinking about the body of work. It's the 10 or 11 position, or 8 or 9 positions you may have open. What's the body of work? Take a look at that, because if you hit your stop loss and you have a 3, 4, 5% stop, the loss, that can suck your attention away from your total body of work, where you may be up 17% across the whole range. So to get out of the fear, uncertainty, and pain cycle, he recognized, one, that he could be both his best ally or his worst enemy. Every story needs a villain. In the story of trading, sometimes we're our own worst enemy. We're the villain of our own story. Change the routine also includes mindset. There will be challenges along the way. Cross the transformation bridge and start rewriting your own story today. Have you ever found yourself wondering if there is more than a straightforward path? Hey, check out my book. It's over on Amazon. I will put a link in there we go. And check that out. It is a bestseller, and we've done really good with it. It's a really great book. A lot of people have said that it's one of the best books ever written about swing trading. I won't brag on my own book, but that's what they said.
Yeah, I read it. I read it, Dennis. It's a great one. I recommend it.
Thank you, Floyd. And so,
Do you have a link to the 7 candlesticks you need to look at?
if you will send me a email, and there is my email address. Let me go forward to that. If I can find the darn thing, there we go. If you'll send me an email, I'll be glad to send that across to you. There you go. Are those coming through?
Yes.
Okay. Okay, great. Before I close, first, I want to see, are there any questions? Does anybody have any questions? Now's the time to feel free to turn your cameras back on. I'm going to turn mine back on and find out why I'm not connected to I hate it when this happens. My device went off. Let's see, where are you?
So while Dennis is doing that, anybody have any questions for Dennis? Someone asking a question?
Okay, Floyd, I'm not going to be able to turn my camera on because my battery has died.
We see you on the screen right now with your last slide. How about some questions out there for Dennis? Come on, guys.
Thank you, Terrell. Appreciate that. Thanks, Alex. Is this the Alex that I know in San Jose? So no questions? Oh, okay. Well, if there's no questions, I will do one thing,
Go ahead.
Floyd.
I was just going to say I have one last slide, but if you have something more to say, go ahead.
No, the only thing I was going to say before I close, I just want to extend a heartfelt thanks to you, Floyd, and the Anchorage IBD Media Group. You work tirelessly to bring us together and provide just absolutely wonderful learning environment and growth. And, and what you're doing, we do something slightly, similar, but slightly different with the TQQ and all that kind of stuff. But your dedication to fostering a community of informed and successful traders is phenomenal. So thank you, my friend. I appreciate it. And, aloha and God bless everybody who's here. If you have any questions, drop me an email.
Thanks, Dennis. You're very kind. I view the whole IBD family. We're in this thing together, and if we can support each other, it's just a wonderful thing. So I was going to share one more thing before we sign off. The recording and Dennis's slides will go out probably tomorrow night or Saturday, and it will go out to all 600 members of Anchorage IBD Meetup. And when you get that, if you know someone else that would like to see it, you can feel free to share it too. I was going to show one more slide that I put together that I need to find now. Oh, right here. Some of you have asked me a question of what are the basis of the price action on these levers ETFs. And this slide shows you as of a couple of days ago, this is very different. Well, it's somewhat different than the slide I showed about 2 months ago because these do adjust, but you can see, for example, for TQQ, the top 10 holdings, and for FNGU, which is an exchange traded note backed by the Bank of Montreal, they only have 10 holdings. They're very concentrated compared to these other three. But I've listed the 10 for FNGU and the top for the others. For example, TQQ includes Costco. TECL includes Accenture, and SOXL includes PI. And then I noticed FNGU's got Netflix as one of their 10 and Snow. So these change occasionally. I don't know how often they adjust the accounts, but I think it's not very often at all. But I actually have this printed out on my desktop each morning when I'm watching the market action. And I noticed the other day that SOXL just took off like a bandit. I think it went up 14.4% in one day. FNGU went up 14.4% in one day. And you'll notice that their number one holding is Meta. And that was a day that Meta gapped up. I made a huge gap up, and it made me really notice when I looked at my list of stocks, I'm going, aha, that's why it gapped up. And then I've noticed that occasionally TQQ lags a little bit, and its number one holding is Apple, and Apple hasn't been a very strong stock at all here in the last 2 or 3 months. I think it's interesting, and you might want to consider either taking a photograph with your iPhone or printing it out so that if you're going to be trading levers ETFs, know what it is you're trading and know why. I was surprised to see Costco, for example, on the TQQ list, but hey, that's good information to have. If you look at a chart of Costco, it's been on fire for the last year or two. I mean, Costco is an amazing stock. And their model of offering, low prices and membership fees and et cetera. And they just opened, Anchorage, they just opened a business center. And I think they only have a limited number, like maybe 12 or 14 business centers across the U.S., but they opened one here because they believe that all of the people who live on a remote Alaska will be getting on the computer and sending orders in for groceries and whatever it is they want to buy. And I think Costco is guaranteeing second day delivery, and they're saying they're not going to deliver perishables. but they have a vision that they're going to make some more money. In order to show this list, we're excited about the prospects of these 20 or 30 people we have that are back testing on TradingView, and hopefully we'll come up with some fine tuning on the strategy, which we will be sharing with others. So I'm going to stop talking, and I want to see if anyone else have a question they thought of they want to ask Dennis, or a question for me before we sign off.
Hey, Floyd.
Yeah.
This is Dennis. Hey, I just dropped one of the stocks I've been watching continuously. It's called Mara. It's a crypto stock. I don't know if you guys follow it or not, but it doesn't have really great fundamentals. At the same time, though, it has really great technicals, and it is just setting up for a potential pre-earnings run. It has this interesting thing where it tends to jump and run. So it could run 50+% by the end of February. You can see it just took off of a nice little pullback, and it's above 20 now. I'm targeting right now that between now and it could run up to, I would say somewhere. My target right now is $25, but I would be looking at trying to pick up some more of it at about $20. It also has great options if you're an option trader.
Okay. Thanks for sharing that one. That's good to know. I mentioned Meta just a little while ago, and you can see why FNGU took off like a rocket. Look at that gap up. I mean, this is a very large stock, trades 18 million shares a day, and it gapped up from 400 to 450 or whatever that number is in one day, and it's held up, and it's staying there. And if you'll look at Chipotle Mexican Grill, I think it had earnings yesterday, and it went up maybe $100. And I noticed today Booking Holdings went up $130. There's an amazing opportunity out there. In fact, I remember reading in one of Bill's books, or maybe in an IBD article, the sentiment said something like, in the U.S. stock market, there's a life-changing opportunity that occurs almost every week. Our job as individual investors is to find at least one or two of those every year. You kind of thing, we can't find them all, and some that we think an opportunity may not play out. But let me show you, for example, Costco. Who would think that Costco would be a stock? Are you seeing the Costco chart?
Yes.
So look at here. Back in January of 23, it's like a $450 stock, and now it's like a $725 stock. Or like Lilly. I think Lilly has been one that over the last year or so, I mean, it goes from $300 to $735 in about a year. I mean, that's more than a double. Using the strategy and techniques that Dennis talked about tonight, using the principles and guidelines we read in Bill's books and then through Investors Daily, we all have, it's all within us. We have the power with good homework and simulated trading to make a huge difference in your success rate. It's within our power to do it. And there's people like me, Dennis, and many others out there that can help turn the flashlight on the path of success. But it's up to you to take the steps to do the homework. I think Bill used the example that if you needed surgery, would you want to go into the hospital and have a surgeon that had gone online and saw a couple of surgeries done and maybe had practice on a cadaver or something, but you were going to be the first real deal? No, you want someone that's been doing it for 20 years and done the surgery 200 or 300 times, or the airline pilot up in the front seat. How experienced do you want him to be? Like the guy in that Los Angeles pilot the other day, and when that side panel blew out of that plane over Portland, you darn sure hope you got someone that knows what they're doing up front. Well, the same thing applies to investing. Dennis was talking about, Sam had these visions of success and all that, but if you're willing to put the time in, do the simulated trading, keep the journal, figure out what's working, what's not working, you absolutely have the opportunity to get some nice returns. And think about it. If you could figure out how to make an average of 15% a year, and you should be able to do better than that, but at 15% a year, your money doubles about every 5 years. You just think about the power of what that could do for you financially, for your family, for nonprofit organizations you want to support, for your own community, and et cetera. So I wish everybody great success out there. Right now, we're definitely in an uptrending market. That will change. I promise you, that will change. But what have we been up at? 14 of the last 15 weeks. So we're in a very sweet spot in the market. And I promise you, it's within your power. If you're not successful now, it's within your power. And if you're a successful trader, it's within your power to even improve on that. And more importantly, to share your success with others and to mentor other traders, come along and give back to the community.
I've got a question, Floyd.
Yes.
I asked this in another meeting and want to ask it with both you and Dennis here. It's often said that with some of the stocks that we pick in IBD, take profits at 20 to 25%. But at the same time, there's some that we hold on for long-term winners, that make big gains. How do we differentiate when we should hold on to something that's gone up 25% that'll turn into a big winner? What is that criteria like?
Well, I'm going to start with a partial answer and let Dennis chime in. If you take a portion of the profits on the way up, like maybe at 10, 20, and 30, but that doesn't mean you sell everything. And maybe you're going to let 30 or 40 or 50% of that position continue to run until there is a definite sell signal is one way to do that. But I don't think anyone is advocating that when you get up 10, 15, or 20%, you have to sell all 100% of it. But if you do, the next time there's a sell signal, you can always get back into that same holding. But I'll let Dennis say some more here.
No, Floyd, that's absolutely excellent. I also promote the same thing. I want people to learn how to be winners. So they take out profits at 10% on a partial, not all. Then once we get up 20%, I literally want to make it fire and forget. I had no clue when I entered CrowdStrike last year at $172 that it was going to be up to $323 today, and up 87%. But what I did was once I got up to my 20%, I threw on a 12.5% trailing stop that would go up with the price action as it went higher. And so, which guaranteed me that I would be in for letting my winners run. I got in at 172 on Zscaler. We got in at 160 last year, and Zscaler's up to 249, up 55+%. We got into it way back in November. I got in at 160 on your chart there.
Back over here.
Yeah.
Okay.
And basically utilizing my, the system, but that's where it triggered me in on.
Well, let me ask a question, though. The person who asked the question, do you know what a trailing stop is?
Oh, definitely.
I just want to make sure you knew when Dennis used the term, because if you put a trailing stop on for a certain point and the stocks run, it's impossible for you to lose money. But then you let that baby run. You just don't want to put the trailing stop real tight. If you put a 5% trailing stop, it's guaranteed it's going to blow you out within the next 1 day or 1 week. Every stock has its own personality. So you want to look at the range of prices are. But if you put the trailing stop on, you can guarantee that you'll never lose money.
Yeah, that's not got a question.
Yeah, hold on, just one second. That's exactly what I do with that, Floyd, is I found through research and experience that most stocks don't pull back more than 10%. Most. They don't pull back more than 10%. So by putting my trailing stop, and ATRs are a great way to do it also, I hide the order from the market maker through Thinkorswim platform. But I found that 12.5% works really, really well. And then at least once a week, I double check. Maybe it put in a new swing low where I can move a stop up below that swing low. And so I'll have, I'm working two different stops at the same time.
I was wondering, Yeah, Dennis, this is Graham. I was wondering how you do the ATR. I've just started hearing about that. Do you look back a certain number of days for that ATR range or weeks, or what do you do?
I personally do not use the ATR.
Okay.
A lot of people do. It's just, I like to keep it. I find since a lot of people follow my trades, I like to keep it really clear and simple for swing trading success. And the way I do that is I go with percentages, but I hide my orders for the market makers, go down there and hit my stops.
A lot of brokers, do you have to tell them to not
Well,
send that to the
well,
market makers?
I called up the E-Trade guys and I asked them, when I put a stop in there, like a trailing stop or whatever, is that visible to the market makers? They said, at least on their platform, and maybe it's because I'm on the pro side of their platform, every one of their orders is invisible to the guys on the trading floor until the position is hit, and then it becomes visible. So I think maybe it's a remnant from the way trading was done 10 or 20 years ago. I'd be surprised with most platforms.
You're making me sound old, Floyd.
Yeah, I mean, like Interactive Brokers, for example, wouldn't be putting those orders out there for everyone to see nowadays, would they?
I don't think so.
Not necessarily.
Call them up and ask them.
And neither does Thinkorswim. And now that they're switching over to Schwab, they don't either. At the same time, it's part of my routine that it's kind of like I want to default to being rather, safe than sorry.
But I'll tell you guys what is visible, because I trade options quite a bit. When I put an order for an option in, it changes the price within a half a second. Sometimes I'll put in a limit price for a certain price, and those turkeys want 5 or 10 cents more. If I raise it 5 or 10 cents, within 1 second, it's 5 or 10 cents even more than that. And so what I've decided is, after I give it to those guys and make one change, and they want me to go higher, I say, no, I'm not playing that game. And just I put a price in on a bull call spread that worked out just fantastic. But as soon as I put the price in, those turkeys wanted like 10 or 15 cents more.
Yeah.
And I said, I'm just going to wait.
Dennis, one more question.
Yes, sir.
Hey, how do you pyramid out? I guess that's the term, at 10%, 20%, 30%, what portion of you get, please?
Yeah, what I utilize, and this is, it varies, and I encourage people to design what they do. But basically, I take off 30% at 10%. I take off 50% at 20%, which leaves me with 20% of the remaining shares, right?
Yeah.
Now, one of the things that I've done here, we just got into a second position on Palo Alto Networks. We entered that Palo Alto Networks at 339 just this past week on the last pullback, because we've already closed out for about 17+% on Palo Alto Networks. And it looks like it's going to be like a rocket ship. I'm loving it. So when I put in the second order, I treat it like a completely new position. I let my trailing stop on my original position, I let that sit, let it do its thing.
Yeah.
And then normally I would, rather than taking it, on the new order, because I do a full position, rather than taking that out at 10%, 20%, and then let the rest run, I am working on utilizing, taking out 50% of it when it hits 20% and letting the rest run according to the trailing stop. That way I can build a bigger position and boy, you talk about launching your portfolio, that really knocks it out of the park.
Excellent. So does that math, I'm not going to sit here and do the math. Does that math then, I wrote it down, but does that math then get you to protection at break even?
Our traders become break even protected once price has gone up 7.5%.
Okay, got it.
Because what happens is the OC orders that we put in, it triggered once price. Well, what I do is once price action goes up 5%, triggers a trailing stop of 7.5%.
Got it.
What that does is that immediately takes risk off the table.
Yes.
And so the worst, let's say my average loss, I have a catastrophic loss of 5 to 6%. My average loss sits at about somewhere between 3 and 3.5%. And so what that does by doing that is, let's say I get up 6% and it falls back. The max I'm going to lose is 1.5%.
1.5. Yeah.
And once I get up to 7.5%, that's why I call it fire and forget.
What do you do about, if I can ask one more question, what do you do about overnight gap downs? Is there anything that can be done there? Is there any brokers that'll handle stop losses during the off hours or no?
Normally, we don't really worry about that. Now, the question is, what caused the gap down? Normally on stocks, what causes the gap down is either news, but the big driver on gap downs is earnings.
Right.
Most earnings, you're going to get a move of either plus or minus 10%.
Okay.
Right
Plus
there,
or minus 10, most.
right there.
Now, there are some that is different than that. So what I do is if my profits are not over 10% going into earnings, like the day of earnings, or if it's before the market opens, I close the position, whatever profits it is. If I'm 10% or over, I've already taken profits, right?
Yes.
If I'm 10% or over, I then take the remaining shares and I close half of them. And then I will ride through earnings because I've already taken profits on 2 pieces of position. And I know that the probability of it staying within a plus or minus 10% range is greater than 70+%.
Okay. So 100 shares, you've sold 10 of them because you've made 10%. Coming into earnings, you've got 90 left. You sell 45 more, which is 50% of the remainder. Am I getting that right?
No. If I hit 10%, I sell 30 shares.
30% at 10%. Okay.
Yeah.
Yeah. And then you're going into earnings. So you're going to sell half of the remaining 70%. Is that right? Yeah.
If I'm over 10%. If I'm less than 10%, like we got bushwhacked by Amazon this past week because it went up, hit 10%, sold that, dropped down to about 8.5%.
Oh.
So living by my rules, I had to close out the whole thing. And that's the one that gapped above. And we were also in team at the same time that reported the same day. It was up like 17%. But the cool thing about it is we closed out part for 10%. We closed out part at 16%, really expecting the earnings to take off like a rocket ship. They did not. So it closed out.
Guys, we've been going now for a little bit longer than 2 hours. I'm going to hold off for one last question if we can before we sign off.
Floyd, I have one thing to share with the folks. If you have ever risked or been chasing the goal, the holy grail of trading, one of the things that goes along with that is you think that if I just get more knowledge and learn more stuff, it's going to make me more successful. And that is a huge myth. It is not true. So while more knowledge will provide you satisfaction by how smart you are, applied knowledge, in other words, taking the time to do your simulations and all that type of thing, applied knowledge leads to fulfillment. And that's what we should be after with our trading.
The only thing I'm going to amend to what you just said, though, Dennis, is simulated trading can only take you so far. And it can be quite valuable, but until you get real skin in the game and real money and real emotions, that's where you can really gain some valuable experience, provided that you write down in your journal, why did you buy a stock? What is your expectation? What is your stops for protecting yourself, and etc. Simulated trading, in my opinion, will take you maybe halfway to where you want to be, but until you're using real money on real trades, it's like you can do a simulator on learning how to fly an airplane, and it can provide some valuable experience. But until you get beside the controls and you hear the tower talking to you and the noise of the engine, it's a little bit different experience. The journey includes a period of learning where you're going to have some losses and a little bit of pain when you're using real money.
I agree with what you're saying. During the first 90 days, if somebody's a complete newbie, during their first 90 days to 6 months, they do not need to go through the pain of losing anything. But once you get past that, if I paper trade and simulate trade for a month, I'm not emotionally ready to take on the losses. Get a little bit more time under your belt. And then when you start trading quarter positions, half positions, and don't go immediately to, because I agree, because the pucker factor goes up immensely when real money is on the line. You don't have to jump right in and start immediately trading full positions. Go a quarter position, and then you earn your size.
So Dennis, you have any other parting words before we sign off here?
Good night and aloha and God bless.
Okay, guys, we're going to record the meeting. I'll send the recording link out. We'll send the slides out. And you guys know my email address, tqqinvestor@gmail.com. If you have any follow-up questions, you have Dennis's email. Happy trading to everybody with God's blessings, and we'll see you again next month. Thank you.
Thanks, Claude.
Thanks, Floyd. See you, buddy.
Hey, Dennis, can I ask you a quick question? Okay.
As long as Floyd doesn't cut us off. Last question.
Just a really quick question, two-part question. Do you utilize base counting in your risk management analysis? And if you do you have a rule that governs when a stock is at either a stage 4, stage 5, or above?
That's a great question. And the answer is no regarding base counting, but I arrive at a similar process through evaluating momentum, especially on the weekly charts. And also I'm looking at those price action, what's going on. And also I will take a look at, while I don't count the basis, I do take a look at how many waves we've had on the way up. And if we've had too many waves, I go, this is not a really great opportunity to get in. Second part of the question, Joe?
Oh, yeah, that was it. The second part of the question was about whether or not you had a hard and fast rule that you use when it comes to the stock, if it's at a stage 6 or 7 base, if it even gets up to there.
Yeah, most of those kind of stocks that have already, like if you take a look at Palo Alto Networks right now, because it's so far extended, I'm looking at how far it is away from its 50 or 20-day moving average. And if it's way extended, it's telling you that what's going to happen, it was going to revert back to the mean. And so it's not an optimal time to be purchasing shares, even though it looks so luscious and you're really angry because you missed it the first time. Thanks, Joe. Good night.
We're signing off, guys.
God bless.
Of your YouTube channel. Thank you, Dennis.
Thank you.
Thanks, guys.